Hey, what's up, everybody? This is Courtney Golden with the Flex Financial Trading Group. Just checking in with you guys real quick. Hope you guys are having a good evening out there. Obviously, in the stock market, we're in a little bit of a pullback in the last couple of weeks. So just want to do a quick video, hopefully easing some of the concerns, easing some of the fears that some of you guys might have in the market, and some of the things that I try to remember with me trading and investing and putting my hard-earned money into the market. So before I jump into that, though, I want to shout out our Flex member, Willie Mack, in his clothing brand called Frank White. Him and CJ Wallace, Biggie's son, they got a dope clothing brand called Frank White. He sent me this T-shirt. You got Biggie on there. You guys can't really see that good, but go check out his brand, Instagram, Frank White, and then they also have a dope cannabis brand called Come Think Big. So you guys got to check them out. He's a Flex member. We really enjoy having Willie in the program, and thank you, Willie, for this shirt. Kev's gonna be jealous because he didn't get his shirt, so I thank you for sending the shirt to me, man. But really, let's dive into what I want to cover tonight. So again, obviously the stock market has had a rough couple of weeks with some of the economic reports that's been released, the low job numbers, higher inflation, all of that is causing a lot of volatility in the market and causing stocks to go down. And then it could be an even bigger correction still out there. So that's something, we all got to be prepared for. If we're putting your money into the market, if you're trading in the market or investing in the market, you got to be prepared for anything, right? So again, the reason I want to do this video is hopefully to help some of you guys out. You got to understand, if you're putting your money in the market, if you're trading it and investing the right way, then you shouldn't be worried or concerned about these temporary pullbacks or even bigger corrections that we see in the market, right? So the first thing we got to have is patience, right? That's going to help us weather the storm and get through these periods in the market. So one of the things we got to remember, so last year, for those of you guys that were investing in the market last year in March, between February and March of 2020, we had a 33% drop in the stock market in a month, right? That was one of the fastest declines in U.S. history. But the thing about that time period is, back in February or March last year, it's also one of the shortest bear markets because the market actually fully recovered by August, which basically was less than 6 months. So very short bear market. Stocks were already up by August in less than 6 months. So if you look at the S&P 500, where we are today, we're at over 4,100 points. If you look from back in March of last year to now, that's an increase of 83% since March of 2020. So again, you got to be patient, right? Those people that sold out last year because they panicked, they took their profits too early, or they might have even sold for losses, they missed the opportunities to buy some great companies at a low price and ride that 83% gain back up to where we are today. So that's a huge missing opportunity if you're panicking and you're worried you're selling out of your positions because the market is in a temporary pullback or correction. So that leads me actually to the next point, right? Being able to buy great companies during a market pullback. The famous Warren Buffett, he said it best. He kind of coined the phrase, be fearful when others are greedy and greedy when others are fearful, right? That's the truest saying when it comes to investing. So in other words, you got to look for those opportunities, look for those good opportunities to buy great companies when other people are dumping their shares, they're panicking, they're selling out of positions. You got to have a different mindset that nothing's wrong with these companies fundamentally. This is a buying opportunity to catch some of these shares at a lower price and hold those shares and be able to ride the market back up. So one example of that, back in March last year when we had that 33% drop, Disney actually dropped 40% and hit a low of $85 per share. So Disney's share price at the time, that had nothing to do with the fundamentals of the company. It's a market-wide correction, market-wide correction, and that led to a low of $85 per share with Disney, right? So hindsight 2020, if you're a smart investor, it was a great time to grab some shares for the low and ride those shares back up. And if you held long enough to where we are today, now Disney's trading at $170 per share, right? So it's all about being able to capitalize on the opportunity and jump in on some of those pullbacks and get some of those really great companies, focusing on quality companies and getting them at a value price, right? And then the last thing is we got to shift our mindset to being long-term investors, right? So I know all of us, we want those quick profits. We want to enjoy our money right now. We want to be able to go out, buy our luxury items, go on vacation, buy that, jewelry, those shoes that we wanted. But along with that, along with getting those short-term profits, we have to incorporate a long-term strategy when you're investing in the market, right? So you have to have a long-term approach. And the reason for that is this is where your true wealth is going to be made over time in your long-term investing. So you can't be all about the short-term profits and the quick profits. And for our traders out there, I know people love to trade. I was one of you, a day trader for many years, so I understand the excitement and the thrill of trading. But you got to shift your mindset and incorporate that long-term investing approach, because day trading will get you income and short profits, but your long-term investing will build your wealth and your riches over time, right? So that's where the true money is at in long-term investing. So with long-term investing, you can't overreact to these temporary moves in the market. You got to look at the bigger picture and kind of keep in mind what you're looking to accomplish over the long term and your long-term money goals, right? And building that generational wealth for your children and ultimately getting to that financial freedom that you're trying to get to. And when I say long-term investing, a lot of times people it kind of turns people off when you say long-term investing, because people want their money right now, they want it quick. But really, when it comes to long-term investing, at least in the Flex Financial Approach program, we're really speaking to about a 3 to 5 year period or longer, depending on what your time horizon is, right? So everybody's different. Everybody has different goals. But one thing to keep in mind, even with long-term investing, the average pullback in the market only lasts about 66 days, right? But obviously, it can feel like much, much longer than that, especially if you're checking your account value, you're checking your TD Ameritrade, your Robinhood, and you're seeing where your money's at on a daily basis during a correction. It can feel like a lot longer than 66 days, but the average pullback in the market only lasts about 66 days, right? And then one other thing to keep in mind, over the last 30 years, the market's had a lot of pullbacks. It's had a lot of corrections, had a lot of bear markets in the last 30 years. But one thing to keep in mind is, even though that's the case, the S&P 500 still averages an 8% annual return on a yearly basis. So even though we're having those pullbacks, the stock market always retraces 100% of the time. And if you're patient enough, you'll be able to weather those storms and ride those stocks back up to those new highs, right? So again, the market corrections is nerve-wracking. It's a test. It's concerning. It's a test of patience. But again, we got to remember that the stock market will retrace. It doesn't go in a straight line up. We got to remember to be patient, look for those buying opportunities, and also have that long-term approach to the market. And we're going to be able to ride those pullbacks and those corrections. We're going to be able to ride them out much easier, right? So keep those things in mind. I hope that helps some of you guys, helps kind of alleviate the fears out there, alleviate the anxiety and the concerns about these temporary pullbacks in the market. Just understand that it is exactly that. It is temporary, right? So be patient and everything will be just fine. As long as you're investing in quality companies. I can't stress that enough. Understand what you're investing in. Put your money in quality companies. Don't invest on speculation. Do your research, do your homework, and understand what you're putting your money into, and you'll be just fine. So that's it for me. If you guys need some help with your investing, you need to understand how to look at a company and understand where to put your money and have a plan for yourself in terms of your trading and your investing. Check out our program at flexfinancialtg.com. That's exactly what we provide our members, whether you're new to the stock market or you've been in the stock market and have experience, but you need a real plan for yourself and you need to kind of understand what you're doing. We have the program for you. So check us out, flexfinancialtg.com. Hit us up, send us a DM, or you can book a free consultation call right on the website. We're always happy to jump on and answer your questions about our program and see if it's the right fit for you. So that's it for me. If you guys are tuning in on YouTube, definitely hit that like and subscribe button. If you're on Instagram, Facebook, whatever social media, give us a like, give us a follow, give us a share if this helped you out. So definitely appreciate you guys tuning in. We'll catch you guys on the next video. Have a good week. Peace.